All right. Hey everybody, how you doing today? We're going to go over something that we normally don't cover in our videos, but I really want to share something special with y'all. And I think that this is really going to be useful. Have you ever gotten caught by surprise, right? You're in the market and let's say you've been seeing a rally go up and you've been missing out on that rally, right? And then you buy in, and the moment you buy in is when things start to crash. Well, we've got a few charts and a few different layouts that I like to use personally to give me a reading on some of the internals going on behind the market. Okay, these are going to be very useful to help you notice when the market is going risk off and when it's going risk on. So be sure to smash that like button, subscribe to the channel for more. This is our first one right here. We have the SPX, then we have XLY/XLP, and then we have XBI. The other one is going to be the skew and the SPX. I have this chart layout as well. And then also here we have the percentage of stocks above their 200-day moving average and their 50-day moving average. All three of these layouts and setups are very useful and I think will help give you an edge. So if you enjoy this video, be sure to smash that like button and subscribe to the channel for more. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. You can also email me anytime for a one-on-one personal coaching session, zachleytrades@gmail.com. I do those every single week. And today's video is sponsored by Simply Wall Street. It's a really great platform, guys. I've used it for a while. Glad to have them as a sponsor. And if you use the link in the description below, you'll get a 14-day free trial and up to 40% off for the first 100 people that join. Now, this first chart that we're looking at here, all right, I told you guys what it was. We have the SPX right here. So, we have the stock market in orange, and then we have XLY divided by XLP right here. And so what this is taking a look at is this is taking a look at consumer discretionaries divided by consumer staples. So when you see this go down, it means that consumer discretionaries are underperforming consumer staples. Now, consumer staples are going to be more of a defensive sector, and consumer discretionary is going to be more of a growth sector and risk on sector. And you can see that these two almost mirror each other, right? The SPX and the XLY divided by XLP. It's not a spitting mirror image, but you can see that they do trade very similarly. Now, I pointed out in a video recently that we saw the XLY XLP chart was going down, right? And it was signifying that the market was going risk off. And a lot of people were caught by surprise by this recent pullback. Okay. And we're continuing to see this go down, right? So, we're going to be looking for a change in breadth in this, a change in direction. If we start to see this curl back up, we could see that the market is going back risk on, and we could see the market follow that. Now, this is XBI right here. This is the biotech sector of the S&P 500. And the reason that I use this XBI chart is because, in my opinion, this is the most risk-on asset class there is. Okay, it's biotech. A lot of these companies are profitless companies that investors are investing in, hoping that they create some, new trial drug or come up with basically some new invention that isn't out there. Okay, that will bring investors profits, right? That's the whole kind of general thesis behind XBI. So in my opinion, it's a very risk-on asset, the most risk-on asset class in the stock market or sector. And you can see here that we were creating these lower highs here in the XBI. So the market was telling you that it's not going risk on, right? And even though the market was continuing to go higher, you start to notice these signals, and I started to notice that the XBI was going down here, right? You can see when this was rallying, okay, you also got a rally here in the XLY XLP and also a rally in the market. But now it's created these lower highs. It's telling me behind the scenes, the market is starting to get a little bit more risk off, right? And we're seeing the same thing with the staples divided by, or discretionaries divided by staples. Now, this is a really other useful one. This is the skew up here on top, which I'm not going to spend a long amount of time explaining what the skew is. We'll just go over the strategy essentially. But I've got these key levels here highlighted, and each time we come to these key levels, it's been met by a sharp drop in the S&P 500, right? You can see this a little bit more when we zoom in, and then I've also got the buy zone here listed as well, right? So you can see each time we've come down to this significant level, we've seen a sharp rally in the stock market, right? And you can see that again and again. Here we are zooming in, and so you can see when we came up to this level here, it was met with a sharp decline in the stock market, right? And then we rebounded and we came up to this level here, right? And you see a sharp decline in the market. And then we came back down on the skew, came back up to this level here, and a sharp drop in the market. Okay, then we came over, we hit our buy area right here. And we can see that we've come up now to these levels, right? And we're seeing a divergence here where this is making lower highs while the S&P 500 is creating higher highs. And now we have this pretty much a bearish engulfing weekly candlestick here. And the week isn't even over at the time of this recording. There's still time left, so that could change, but it's very interesting to see, and we're still seeing this tick up. So, as this starts to go down, we could be due for more of a drop in the market, but these are just some of the things that I like to look at and help me out, right? Even over here, this time when we came up to this level, you can see it was met with a red weekly candlestick here. And so it's just something to consider and something to add to your watch list. I think is pretty useful for helping you spot certain times when there could be corrections, right? You can use this other layout here to see when the market is going a little bit more risk off, maybe when we start to get a pullback, right? And then you can use this chart here to say when we could potentially be getting a pullback as well. The other one I like to use is the stocks above their 200-day moving average and their 50-day moving average. And I've got some key levels here, basically when the market is starting to top out and when the market is starting to bottom out. And if we zoom in here, I also like to look for divergences in this, right? So in this case, the stock market was going lower, but we saw stocks, the percentage of stocks increasing above their 200-day moving average rising, and the percentage of stocks above their 50-day moving average rising. And sure enough, the market ended up rallying, right? Now over here, we're seeing that the market is creating higher highs, but the percentage of stocks above their 50-day moving average here is actually making lower highs. So there's less stocks above their 50-day moving average, even though the market's gone higher. And sure enough, we are met with a pullback shortly afterwards. Now, if you take a look here, we came up to the sell level here on the 50-day simple moving average, or the percentage of stocks above their 50-day simple moving average, right? You can see over here, it was the last time we hit that level and we had a pullback in the market. Over here, we just hit that level again and we're starting the pullback. So, these are really useful things that you guys can, I think, add to your watch list and add to your setups, just to help, make sure that you guys aren't caught by surprise so much, right? As I described in the beginning of the video, there's oftentimes where people come in and they feel like, oh, I've got it, I've got to buy in now. I missed this rally. And then as soon as they buy in, things start to pull back and then they panic sell, right? So maybe this can help prevent that for you guys. And if you enjoyed this video, smash that like button, subscribe to the channel. Also, join my newsletter, okay? I put out lots of useful info. I just started a newsletter, and you'll be able to find charts like these inside that newsletter. It's completely free, all right? There's going to be a link down below. You guys can click on that, sign up for the newsletter. And I'll also be giving out free trade ideas in the newsletter as well. So I think the newsletter is going to be really nice. I think you guys will enjoy it a lot. So definitely sign up for that.